Good morning from the Asia Pacific. It's 9 a.m. here in Hong Kong, in Shanghai, and in Shenzhen. You're watching the China Show. I'm David Ingles with Rebecca Chung-Wilkins in Singapore.
A very good morning to you. We are counting down to the open of markets in Greater China. Our top stories today. Asian tech hardware makers are leading stock gains as Alphabet and Tesla raise their spending plans to accelerate AI capacity. The White House accuses Moonshot AI of using banned US chips for its breakthrough Kimi model that's helped close the gap between Chinese and American platforms. And Brent tops $95 a barrel as Iran-backed militants in Yemen attack tankers in the Red Sea, creating a second choke point in the energy supply chain.
A very warm welcome to all of you joining us from across the world. Dave and Bex here. Going to take you through a lot of the top stories, of course, over the next 2 hours or so. Let's start things off with this rally we're seeing in markets. And really, I guess to a large extent, markets are back to the dynamic that we saw back in April, where we're ignoring the geopolitical developments. I wouldn't say noise at this point, but so far it's been noise to most parts of this market. Yes, oil is at 96, but as you can see, this rally continues across the Asia Pacific. Two things there. Two related things there. Of course, you have the earnings coming through out of the U.S. on the tech side of things. And also, of course, what's happening in South Korea specifically. We'll get to all of that in a moment there. Alphabet down in your after hours. Just keep that in mind on the back of earnings coming through. S&P futures flat. Flip the page. Taiwan is coming online. You have Korea, SK Hynix. Singapore is also coming online. SK Hynix up a further 5%. Juxtapose this against most of China tech overnight, moving completely against the grain here with, by the way, Tencent this time yesterday fell substantially in the cash market session. We did see that continue into the U.S. market session. Hence, we'll track this, of course, as we go into the session today. A50 futures coming up on your screens. Dollar China has been on the weaker side of the exchange rate. But as far as the basket goes, because almost everything in that basket has been trading weaker, something to watch, of course, is the basket is now trading, or at least the yuan is trading at the strongest level against the basket in close to 3 or 4 years. But yes, let's get back to the geopolitics within the tech conversation here. So a White House official has accused China's Moonshot of improperly using U.S. AI models and NVIDIA chips to create its Kimi K3 system. It's the latest accusation from the U.S. of a possible IP theft by Chinese AI platforms. Stephen Engel is here with us on set, our chief North Asia correspondent, with the details of this latest accusation, Steve.
Well, of course, Moonshot AI has really upended a lot of assumptions about Chinese AI model capabilities. The assumptions that they were not nearly as powerful as the American large language models like those from OpenAI and Anthropic. And it's really garnered the attention, of course, of U.S. officials. And this is now a second White House official after Scott Bessent, the U.S. Treasury Secretary, yesterday raised allegations without naming Moonshot, but essentially alleging that some of these Chinese models have the digital watermarks of American large language models like Anthropic and OpenAI in their models. So have they caught up because of using improperly through artificial distillation, essentially getting trained by those American models and then rolling out products like Moonshot's, as you just mentioned, the Kimi K3, that is more efficient and essentially uses less computing power to operate. So again, it raises the question about if this was done illegally and in a violation of those export controls. This is what the director of the White House Office of Science and Technology, as you're seeing, Michael Kratsios, he is saying that Moonshot allegedly acquired GB300 equipped servers from NVIDIA, not from NVIDIA, but those are NVIDIA Blackwell servers, and has accessed GB300s in Thailand, likely to train its AI models. Kratsios went on to say that Moonshot allegedly, again, developed a sophisticated internal platform to conduct large-scale distillation against U.S. models. So again, if this is the case, or, the allegation. This investigation is ongoing, according to the information. It is reporting that the U.S. Bureau of Industry and Security under the Commerce Department is formally now investigating whether Chinese models accessed advanced U.S. AI chips. So it's not only the chips, it's the servers, and it's apparently through, now this is again allegedly, through this distillation process, apparently accessing the proprietary models, way of doing it.
Yeah.
As you say, Steve, they're emphasizing a lot of allegations going on. We're yet really to see sort of substantive evidence. And as you sort of said, some analysts pointing out that the timelines here mean this would be quite difficult for it to work out. Nonetheless, AI has been a very important point for both the Chinese and the US side. There has been one area where they are trying to avoid any more friction. So I'm curious at what you think these allegations are going to do when it comes to finding common ground between China and the US. How are they going to undermine or overshadow the work that they're doing?
Well, I think you used the word. It's going to add friction on this front, because even the Chinese in the last 24 hours have come out and said they are willing to have that dialogue that was reported yesterday to continue this, consensus that Xi Jinping and Donald Trump reached when Trump went to Beijing in May. Now, we don't really have a lot of the details of what the Xi-Trump consensus on AI entails, whether it's, co-governance, whether there are fair rules of play, whether it's how it's going to be managed in the militaries. There's still a lot to talk about. Now, the news yesterday was that Reuters was reporting that the two sides will commence a dialogue ahead of Xi and Trump meeting again. Right now, as Marco Rubio said yesterday, it's on track for September 24th in Washington. But these allegations, now that not only, the White House Office of Science and Technology Policy, also the U.S. Bureau of Industry and Security and Treasury Department with Scott Bessent, all sort of laying out claims or the reasons to do these investigations into China's AI models does add a level of friction, and whether that does potentially derail any goodwill on what should have been or could have been, and both leaders expected to be sort of a low-hanging fruit in this relationship, it could actually throw a monkey wrench into that plans.
Steve, thank you. Stephen Engel, our Chief North Asia correspondent there. If one could only distill intention and sincerity, that's going to solve the problem. But of course, that's the key. That's the core argument between AI and, human intention and philosophy. That's just to say, lots of people have chimed in on this. Obviously, it's a very big issue. Let's hear from Anthropic right now. Let's have a look at Anthropic. Of course, the head of public policy, Sarah Heck, posted this in response, of course, to what the post that Steve just pointed out there. And let me just read this almost verbatim here. So, thank you for speaking out on this important issue. Illicit adversarial distillation is IP theft and industrial espionage that supports adversary military and intelligence capabilities. It is a national challenge that creates serious national security risks for the U.S. and democratic allies. We will continue to crack down on it and work with the administration and with Congress, Rebecca, to maintain AI leadership in America. Rebecca.
Absolutely, Dave. I think it is interesting that we're seeing Anthropic with this type of response. And I think there is going to be a healthy dose of skepticism. There are going to be calls to see evidence and exact evidence that Anthropic or others can provide as to the sort of alleged IP theft, as Bessent himself puts it. But also worth noting that Anthropic aren't the only ones weighing in here. We've also had these comments from Jensen Huang, essentially calling for sort of political coexistence here, saying that the US models and Chinese models can both coexist, that so long as there are open source models from China that are excellent, they should indeed be used. And this very, very clear statement, I think, interesting to pick out here, Dave. There's no scenario where China runs US companies off the road. A very, very clear statement from Jensen Huang.
Almost paraphrasing the very consistent stance of the Chinese on not just this, on many fronts, that we are not a threat to anybody. We also heard from, and this is interesting too, some Silicon Valley companies, about 180 or such here. This is the Little Tech Association, recently established, are also appealing to White House officials not to cut off access to Chinese open-weight AI models. In a letter here reported by Politico, as we pointed out, the newly formed Little Tech Association says American leadership requires world-leading American open-weight models and continued access for U.S. builders to open models already widely available. So, yes, we are expecting more sides to chime in on this, and obviously we're waiting to see what sort of, Rebecca, evidence there is, of course, that perhaps backs some of these accusations, Rebecca.
Yeah, I think that's right. And I think, sources that I've spoken to in particular show this real sort of, they're agnostic, right, when it comes to hardware. They are busy competing with one another, small companies, US companies, but also small Chinese companies. They are focused on how to outcompete the other markets that they are operating in. They're not necessarily in a position even to be adding these sort of constraints that are being imposed on them by, for example, US export controls and so on. Anyway, certainly one to keep watching. We'll see if there's a more coordinated or fact, concrete steps taken by the US through this day and perhaps when the US wakes up. Elsewhere, though, still on tech, markets are weighing earnings from AI heavyweights for evidence that surging capital spending is translating into growth. We saw Alphabet shares falling in late trade as it again raised already sky-high estimates for its capital spending, telling investors that expenses this year may top $200 billion. And also, Tesla's profit tumbled despite a strong quarter of sales, with Elon Musk giving a few updates on plans to refocus the company on AI and robots. We have our tech anchor, Ed Ludlow, with more on what Alphabet and Tesla's guidance means for investors making that big bet on AI.
Alphabet, the parent of Google, Tesla. Two very different companies, but the story between them, capital expenditures and AI. Alphabet raised its CapEx guidance for 2026. At the top end, spending will be $205 billion. But there's also evidence that the AI demand for Google is real. Cloud revenue surged 82%. If there was an area of disappointment slightly, it was in search, where there was a modest miss against street expectations, but no evidence that search is being disrupted too much from consumers using chatbots instead of going to Google. Elsewhere, it was an assessment of growth versus cost, and investors weighing booming cloud demand against ever higher infrastructure spending. The next test, whether AI revenue growth goes fast enough to catch up with that CapEx demand. Tesla CapEx, it's going to stay at $25 billion for 2026, but the company is saying it will go up over the next 2 to 3 years. They're not even on track halfway through the year to meet the $25 billion CapEx guide, but Musk talked about the idea that they would rather move more quickly than target capital efficiency. The difference with Tesla is not the same evidence that in the world of AI, the future business lines, robotaxi, humanoid robotics, they don't have much to show for it yet. And so the appeal really was for patience, that these are still long shots with a big build out ahead. This is Ed Ludlow for Bloomberg News in San Francisco.
So everything that Ed just talked about there, we're feeling, seeing, and trading on these big themes across U.S. tech and earnings that are here in the Asia Pacific. Anthony Stevens is here to tell us exactly what we're seeing specifically here, Anthony.
Yeah, it's this CapEx story that is playing through very aggressively on the open here. You see Japan in particular, the kind of testing equipment and semiconductor material space is doing very well. Lastly, you have laser tech really ripping here ahead of Intel's earnings later this week. That's going to be interesting as well for an AI update. So switch the board to Korea, and again, you see more of the same picture. There's a little bit of nuance here in Korea, as Korean market leaders are apparently heading to the US to meet with Jensen Huang. So that's driving the Korean market quite strongly today. Lastly, in Taiwan, we have very similar. So just to go quickly to Korea, you're seeing these big moves. Big laggard Naver has been a huge laggard to the Korean market thus far. That company is about to meet Jensen Huang, and that is quite strong. In Taiwan, you see that bifurcation from yesterday as well. You see TSMC continue to struggle versus MediaTek. And that is interesting because there is this transition from GPUs to TPUs that is being priced. So MediaTek makes those TPUs for Google, and it's clearly benefiting from Google's CapEx plans, whereas the GPU team seems to be struggling with index heavyweight TSMC really struggling. Unimicron pulling back a little bit after yesterday's huge rally, but these two names, Unimicron and Global Unichip, are also TPU names which will be worth watching across the session.
And we will. Fantastic. Anthony, thank you so much. Let's have a look at what's coming up here in shows in a moment, in fact, here on the impact of Alphabet's CapEx expansion here on China's tech sector and broader Asian markets. Thomas Todd of Fidelity joins us in a couple of minutes. If you have any questions for him, you know how to reach us here on shows. To our Bloomberg clients, of course. Counting down to the open of trade, 15 minutes away to cash market open, Hong Kong, Shanghai, and Shenzhen. This is The China Show. Right, welcome back. Futures are pointing to a higher open, just as you can see, just over 12 minutes away to the opening bell here. Joining us here on set, Thomas Taw, head of Asia ETFs at Fidelity. Very nice to see you, sir. Let's start with the U.S.
Sure.
We're getting to the thick of earnings season. We've yet to see Mag 7 really stretch its collective legs. So what's the position? What's the view in U.S. equity markets?
Well, I think when I sent my notes in, I try to preference between tactical and longer term. So,
sure.
I think there's a couple things going on in the U.S. at the moment. From our investor perspective, it's still like, hey, AI is great, tech's great, but I am a little bit concerned about concentration. What do I do about it? You do start to see a broadening out in terms of earnings strength in the U.S. and some of the laggards picking up. Like energy is the obvious one, right?
Yeah.
But you're seeing that in financials as well as yields move higher. And so essentially what's happening is, how do I stick to the core but actually move away from the concentration risks? And that's tactically moving into things like small caps, mid caps, and doing a little bit of sector rotation, but that's obviously quite hard to do.
Well, part of that allocation, I would imagine, then goes to this part of that AI hardware stack is Asia Pacific. So just talk to us about what you want to maintain as far as exposure in this part of the world.
I mean, but that's also part of the problem, right? It's like if my U.S. core allocation is like 65% of my global allocation, then I've got Taiwan and South Korea, which are kind of the same trade. And so,
some of the same problems, too, with concentration.
Exactly. And so, what we're starting to see is there is definitely some overweighting in South Korea and Taiwan. I think these trades are quite tactical in nature, at least when you look at some of the fundamental guys. And then in the U.S., there's kind of a move away from just being purely concentrated to tech and AI. So moving into things like small caps. And then everything else is like, okay, how do I allocate my risk budget to the rest of EM, Japan, et cetera? So, Taiwan and South Korea are very interesting. I mean, I'm sure South Korea is up 100% year to date. There's some bubbles going on in terms of the leveraged ETF stocks that are happening there. But, I mean, it does seem like some of the froth will get taken out of this eventually. But, I mean, this AI tech thing is a real trade. But I think the narrative around, like, the more companies spend on infrastructure is a good thing. Like, I don't think that's the right narrative because eventually you'll see consolidation in some of those AI tech names, right? And so not everyone can win. And so I think some of this CapEx is actually going to be wasted money.
Thomas, I want to pick up on your point about some of that froth there. I mean, you have argued that we are not in a bubble when it comes to the AI trade, but nonetheless, valuations are undeniably rich right now. What does it look like when the froth comes off? How painful does that get?
You want a specific number in terms of the pullback? I think there will be, like, in a couple of years, you'll look back and you'll say, like, maybe that was an aha moment. I think some of these IPOs that are coming through at these insane valuations, when you look at market cap, could be part of that. I think when you look at most of the concentration risks in the market, particularly in the S&P 500, where you have, 40, it could be up to 50% of your entire portfolio in 10 stocks. It is definitely a big concern. And the other thing to mention is that, most of these tech names, which were so-called quality names during the COVID pandemic, are no longer quality value types of names because they are spending so much money on capex. And so, if you start to see the Fed get more aggressive through inflation and raising interest rates, I think that's when you might start to see a pullback in some of these names. But I don't think that's going to happen until the end of the year.
How much longer do you think we can kind of continue to broaden earnings before valuation becomes a genuine headwind? Or is your point here that it doesn't really?
Well, I think, there's two ways to look at the broadening out, right? One is kind of like a catch-up trade where you have mean reversion in terms of valuations. But we've been kind of talking about that for a little while. The second thing is, when you actually think about the broadening out in the market, with earnings growth picking up in some of the laggard names, pretty much everywhere except healthcare is seeing earnings growth in terms of sectors in the U.S. But if you see a broadening out in the market, that sounds like a good thing. But actually, because most of these indexes and benchmark followers are following cap-weighted or market cap-weighted benchmarks, the market will actually go down if you see a broadening out from tech to some of the smaller exposures.
We'll have more with Thomas Todd rejoining us in a couple of minutes there. Of course, he is with Fidelity. Just going into the open today, what are we doing now? About going into 7 minutes of the opening bell. Hang Seng is higher, although as you can see, we've just higher, but yet still knocking on the door of 25,000 as far as index level is concerned. We have a full preview of the trading day just ahead. This is the China Show.
Good morning and welcome back. So a lot on the docket after plenty of developments overnight. A couple of items to really keep an eye out. We had Alphabet, Tesla, IBM all reporting and disappointing in one way or another. Elsewhere, with certain names, Sands China, its controlling shareholder, that's Las Vegas Sands, fell after reporting its adjusted second quarter EPS miss. Horizon Robotics, keep an eye out, a convertible bond priced later overnight. And we still have Wang Yi in Manila, both the Chinese and the Philippines side exchanging protests over this friction in the South China Seas overnight as well. And finally, sectors, chips, energy, sports, all on the docket. Chips, of course, all the discussion that we've had so far today over AI, the criticism that's come from Besen and the US overnight. Energy, we see this potential expansion of friction now into the Red Sea with Houthis attacking oil tankers. Dave, also keeping an eye on sports after we had this interesting 5-year plan coming from the authorities to expand investment there.
Yeah, again, policy support in that sector, and I think you also mentioned energy. I think separately to the energy, we just got this in the last few minutes, laying out this 5-year plan in as far as renewables is concerned. So that's another group of stocks we're tracking going into the session today. Just to also mention, as Rebecca was just pointing out, that Horizon Robotics were down about 2%, as they have priced, of course, that convertible at 5.55 is a conversion rate there, as far as that's concerned. Apart from that, we have lots more ahead, of course, including we're looking at Tencent after that massive drop yesterday. The opening bell is coming up next. This is the China Show.
A very warm welcome back. You're watching the China Show, and we are about a minute shy of the open of cash markets here. A lot of news to digest that has come through overnight, not least over AI, the responses from the White House over developments and frontier Chinese open source models, particularly that Kimi model, with Besen even perhaps threatening that sanctions could be on the table. So we'll see how investors and markets digest that. Elsewhere also, of course, we had all of those tech earnings and mega cap earnings coming through overnight. Alphabet, Tesla, IBM, all disappointing in one way or another. Dave.
Yeah, the markets have set such a high bar, really, in terms of being impressed. Obviously, it's something to watch as we go into the session today, although I think to the point you just made there, we are seeing some reaction in other markets like Japan and Korea and Taiwan specifically on the back of those results. Now, going into the session today, CSI 300 is up about 0.4 of 1%. Flip the page, have a look at where we are in Hong Kong and the open there. And, we're coming off just a terrible session yesterday. Likes of Tencent, for example, fell the most in a very, very, very long time there. We are stable at the open, not as if we're seeing a massive bounce as far as that's concerned. Right. A couple of sectors we've been tracking here, given the policy pronouncements and all the news overnight. Let me start off with AI infrastructure. That should be seeing a bounce last we checked. Let's have a look at there. at how that's playing out. I alluded to how that's playing out in markets like Japan and Taiwan, not so much in as far as mainland China is concerned. We talked about sports. Do we have a look at the sports board, not the scorecard, but literally some sports stocks too on the back of those pronouncements. 5-year plan on sports. If we don't have it, we'll show you that later on. The other piece of policy-related news is on renewables. So we have wind and solar, and the line just coming through in the last, I would say 20 minutes or so. The NDRC, there we go, has issued a 5-year plan in terms of capacity. We'll get into the details a bit later on, but yes, it is playing out across these markets very early on. For some final thoughts, still with us here in set is Thomas Toh, head of Asia ETFs at Fidelity. China's been missing largely from whether that's index plays, some of the commentary you've mentioned too.
Yeah.
Why do you think that is, and when do you think we should revisit?
Well, I think China, from a foreign investor perspective, is still a relative trade, right? And so it seems quite obvious when you look at some of the performances in places like South Korea and Taiwan that China is funding that to some extent when you look at the balance of the book in emerging markets. We saw a similar thing leading up to 2024 in India, where investors were going overweight India, underweight China. Then we had that bazooka moment at the end of 2024 where everyone rushed back into passive Chinese investments. I still think most investors look at this as a momentum trade, so the momentum is not quite there yet. I think there's still quite a lot of pessimism over the underlying economy when it comes to deflation, property, all the things that we've talked about over the years. Do I still think there's some relative value in some of the tech companies and the offshore China names? For sure, but I just don't think that the momentum is there at the moment. And so I think when you start to see some of the unwinds in the froth in markets like South Korea, Taiwan, investors will start looking at China again as a longer-term play, but I think it's still momentum-driven at the moment, and the momentum's just not there.
Thomas, your strategic allocation and your tactical allocation looks very, very different at the moment. Just talk us through why that is. And I just want to pick up on that final point about China too. Do you see a moment when China might fit into either of those?
Yeah, I mean, I think definitely the tactical and strategic are different. I think that mostly revolves around the allocation to U.S. and U.S. growth because, as I said, this is a momentum market at the moment, and all the momentum is in tech and growth and AI, et cetera. And so I think, being underweight those sectors is really going to hurt your portfolio, at least in the shorter term. But I think over the longer term, when you look at some of the valuations and some of the concentration risks, not just at a company and sector level, but also at a regional level, I think strategically you're going to need to move more into some of these ex-U.S. type of exposures and reallocate your U.S. sector exposures as well. So, that's why the strategic asset allocation looks slightly different with more of an overweight to Europe and emerging markets versus the U.S. That's not to say go underweight U.S., but I think just where we are at the moment with concentration, that will naturally curtail over the next few years. I definitely think China could play in either bucket. I wouldn't recommend investors are underweight China over the longer term. I think the tactical playbook could change very, very quickly when it comes to China. I know we're going to talk a little bit about intervention in a little bit. But the trades on momentum in China can change very, very quickly. And so I think it could move into the tactical bucket by the end of the year. And strategically, I think you still need to have China in your portfolio.
If we do start to see US exceptionalism begin to fade, where's the first place that you're expecting to see those global ETFs rotate into?
Well, we're already starting to see it a little bit, right? So it's not really at a country level, but if you look at some of the flows that we're seeing this year and some of the interest, there is a big interest in international as a whole. And also emerging markets. So those are two of the areas where we're seeing, at least in active ETFs, a big shift. And I think that will probably continue. So I think you'll look at more valuation, domestically driven economies, whether that's places like India, Malaysia, et cetera, but certainly in the emerging market bloc, possibly in Europe as well. But it's also about having some allocation to alternatives, commodities, et cetera. So that makes up a portion of the portfolio as well.
Thomas Toh, fantastic having you here, sir. Thank you so much for coming in. Head of ETFs Asia there at Fidelity. I think Thomas just alluded to this, right? The intervention, some of the support measures that we've seen in some ways putting a floor underneath this market and some of the rollout and some of the measures that they have rolled out that we understand, of course, on your screens, the so-called national team buying here, the CSRC engagement and mobilizing some of the state-backed funds. On top of that, of course, it's encouraging some of the SOEs to return some money to shareholders, dividends, buybacks, and what have you. And some of these recent interventions have had its uses, but also have its limits. Let's bring in our team to talk us through this. Our chief Asia economist, Chang Shu, together with Bloomberg Opinion columnist, Shuli Ren, here with us on set to talk us through this very complex topic. Same question for both of you. Let me start with you, Shuli. Why did we get, Chang Shu, I'm sorry. Why did we get a swift intervention from authorities here?
Yeah, indeed, very swift this time. I think there are considerations from the particular sector point of view and from macro point of view. From a technical point of view, it feels as if the recent bout of volatility in China is partly driven by a global market development that's not necessarily changing the fundamentals of the tech sector in China. China still has this very strong AI build-out and aspiration, etc. So that has not changed, and we are going to talk about a big IPO next week, and you just want a very favorable environment. But from a macro point of view, maintaining the market confidence is quite critical. We know consumer confidence and corporate confidence has been very low. There's a bit of support coming from the tech sector market development, so the government really wants to maintain that. So that's why the government has stepped in quite quickly.
Shuli?
Yes, so this national team bailout has a lot to do with CXMT. CXMT is China's largest DRAM memory maker, and it's preparing to go public on the Shanghai Starboard, President Xi Jinping's personal favorite, right? That does the national campaigns and hard tech stuff. And what happened was that Monday, payments for the IPO subscriptions were due, and the market was expecting something like $8.5 billion of money being drained out of it. And that's when you see the national team coming in to pump billions of dollars into the so-called Star 50 ETF to prop up the market. And a lot of it also has to do with the chip rally, right? Like if this chip rally falls, then China has a problem, because in the past, big mega ETFs tend to precede big market sell-offs. We saw that with PetroChina in 2007.
Big IPOs, you mean?
Yes, big IPOs. PetroChina 2007 and Guotai in 2015. They are both SOE companies, right? And CXMT is not quite SOE, but it's very much state-backed. So that's a problem as well.
Yeah, and it's not. Just to also add, here in Hong Kong, not that it's the same market, but you also have very big listings coming here, right? So it's this rush for the same big names with limited liquidity. What was interesting about the timing, too, was when it happened, it didn't seem the market, we all know how it looks when Chinese markets crash. That didn't seem to be the case. It seemed to be more proactive. And I guess my question, again, same question to both of you, Chang Shu, I'll start with you. Can this work? Can these measures stabilize the market beyond the short term?
Yeah, so really we can see the short-term impact that essentially the national team put a floor under the market, but over the longer term, it really depends on how the AI sector is going to evolve and how China will show up the domestic economy. I mean, you can certainly see the strategic importance of China's tech sector. Our team did a global exercise of what if the US AI bubble bursts. What would that happen to the rest of the world? And we see that, for example, Korea, Japan, etc., and Taiwan markets will be badly affected. But in China, you can imagine a scenario because of China's long-term commitment, you would double down even when the U.S. build-out slows. So that's offering some sort of long-term trend growth for the AI sector. But importantly, there has to be a more balanced growth, robust growth in China, and that's where the policy comes in. We're going to see the Political Bureau meeting coming over the next few days. We'll be looking for signs.
Julie?
I think what happens is that China's national team has tried, right? We remember 2015. As the market was coming down, the national team kept on buying. And then that didn't stop the whole market from tanking, right? And I think this time, it's not about earnings. If you look at the chip makers' earnings, they're good. It's more about valuation. China's stock market is so narrow in a sense that nothing else is working. We know China has a deflationary economy, et cetera, right? And then that's why all the fund managers, everyone was crowding to the few chip stocks, and the valuation has become very high. Next week, we will have Zhongji Innolight coming to Hong Kong. That company is an optical interconnectivity company, and it's good. It has a strategic importance, but it's very expensive.
Okay. If you think that's big, wait until Moonshot hits the Hong Kong market. There we go. We're barely scratching the surface here. Team, fantastic. Thank you so much. Shuli Ren, out of Bloomberg Opinion, and out of Bloomberg Economics, Chang Shu there. Just ahead here on the China Show, a new front opens up in a Middle East conflict here with Houthi militants targeting 2 oil tankers in the Red Sea. Yes, that is why Brent perhaps is trading at 96 right now on the most active contract. We'll have the impact and the latest on the energy markets next. This is Bloomberg. Right. Energy markets will be the focus the next few minutes or so, and it's understandable looking at this visual on your screens. Yes, we are at 96. You have extending gains, of course, across most contracts, across most types of energy products at this point in time. You had, of course, this attack on 2 Saudi Arabian tankers in the Red Sea. Meanwhile, you do have both the U.S. and Iran are showing really little willingness, at least publicly, to return to the negotiating table. Let's bring in our Bloomberg managing editor, Jill Deeses, here with us to talk us through what the latest is. Maybe let's start with the attacks themselves, and then we can talk about any diplomatic efforts on the back end.
Yes, David. So this is obviously this is very concerning because this feels like it's sort of opening a new front in this war, certainly a sign of escalation. So you've got the Iran-backed Houthis in northern Yemen say that they've attacked these ships. So this is on the western side of the Saudi peninsula in the Red Sea. So this does raise some serious questions about where exactly this leaves the world's energy supplies. Obviously, with all of the action that's been going on with the Strait of Hormuz and the Persian Gulf, various countries, including Saudi Arabia, have actually used the Red Sea to divert some of that the shipments to another passage to make their way out. You're looking at a graphic on your screen right now, kind of showing the divide there in terms of where some of that traffic is ultimately being routed. So the fact that you've got the Houthis that are actually attacking ships there does raise a lot of serious questions about what this means again for oil supplies. I think that's why you're seeing Brent pressured so much this morning.
Jill, what are the possible paths to getting the Iranians and the US back at the negotiating table? Obviously, we've had quite firm statements from both sides publicly, as Dave kind of alluded to. But now we have this extension, a new frontier, as you say, that we can only expect is going to add in sort of exponential pressure onto all of the other countries that were using this second alternative that's now a key choke point.
Yes, that's right, Rebecca. I mean, as you said, we've heard both from the Americans. We've also heard from the Iranians. It doesn't really seem like there's any willingness at this point to resume those negotiations. I do think that, raises some questions about whether or not any of those mediators that have been involved over the last several months in trying to bring them to the table, whether that's the Qataris, whether that's Pakistan, to see if there's any way to sort of resume negotiations that way. But I think what you've heard over the past several days really is that these two nations are really far apart on a lot of issues that they had agreed to discuss when that interim peace negotiation was initiated, in the middle of June. So you've got some serious concerns about whether they can really come to the table and reach any agreements on Iran's nuclear capabilities. Obviously, that's an issue that's been going on for many, many years. I don't really know that we're at a stage now where it feels like that's something that, they're willing to come to the table on. And then obviously, that control over the Strait of Hormuz in the Persian Gulf in particular continues to be a flashpoint for both the U.S. and Iran. So, whether or not we actually see any kind of negotiation there, I mean, you do have the fact that, U.S. President Donald Trump probably doesn't want this war to continue. I mean, very concerned about energy prices going into the election. So there's some motivation there, but obviously we're not seeing any movement right now.
Yeah, interesting to know perhaps how those midterms might impact the thinking on the US side. Thank you so much for joining us. That's Bloomberg Managing Editor Jill Desis there. Now, sticking with the US, Secretary of State Marco Rubio says that the US and China are moving towards establishing boards of investment and trade ahead of President Xi Jinping's planned visit to Washington in September. Rubio spoke with his Chinese counterpart Wang Yi on the sidelines of the ASEAN foreign ministers meeting in Manila. And our China correspondent, Min Lo, is at the meeting and joins us now. Min, just talk us through what we've heard from Rubio so far.
Yes, so he mentioned the Board of Trade. That was one of the key deliverables from the meeting that Rubio and Wang Yi had yesterday. He said it could be implemented before September. This was first announced back in May when the presidential summit in Beijing happened. And according to Scott Besson, this could reduce tariffs on at least $30 billion worth of goods in non-sensitive sectors. And according to the Chinese readout, it was a positive and constructive meeting. No surprise here that China's main message was once again to urge the U.S. to stick to that one China principle. But interestingly, the Chinese readout did not mention some of the key sticking points like the tech issues that have been taking center stage of late, right? Particularly after the launch of Kimi K3, we know the U.S. is now accusing Moonshot AI of illegally accessing these NVIDIA chips and NVIDIA servers in third countries like Thailand. And earlier there were more accusations as well that Chinese AI models were conducting IP theft, and that the U.S. has found some U.S. watermarks in some of these Chinese AI models. But so far, that hasn't been mentioned. I think one positive sign you can take away as well is that Rubio did not raise the issue of election interference with Wang Yi as well. And this comes after President Trump downplayed any potential retaliation on China after these unfounded sort of allegations. So it seems like both sides are committed to keep things on track to ensure that nothing derails this potential visit by President Xi to the U.S. in September. So that's certainly something to watch, as both sides are also eyeing those AI talks that are supposed to happen before Xi's visit as well. And mind you, Chinese state media has been publishing many editorials accusing the U.S. approach to AI, likening it to the metaphor of nuclear energy versus nuclear weapons, so referring to U.S. as using AI as a sort of exclusive resource here. So that's certainly something that both sides will have to discuss at the AI talk.
Min, just quickly, perhaps less globally relevant, but still fairly significant within the region, of course, is where you are. And, this meeting yesterday between the Philippines and China, what came off that meeting?
Yeah, this was a meeting that has been characterized by very rocky relations of late, right, with the latest clash in the South China Sea. So Wang Yi met with his Philippine counterpart Lazaro, both sides lodging protests against each other, what China had called malicious harassment in the South China Sea and what Philippines is calling violent acts. And the Philippine Foreign Affairs Secretary raised once again this AI-generated video published on China Daily, that's a state-linked media, that portrayed the Philippines as a monkey that was sort of being manhandled by the Japanese and the U.S. So that's a metaphor for how the Philippines is sort of pandering to these two other countries. So Lazaro raised that against yesterday. She has previously said that this was dehumanizing and lacked basic respect, calling for China to take down that post. But again, China has distanced itself from that post, right? The Foreign Ministry previously said that that doesn't represent the formal Chinese government position.
Min, thank you so much. Min Lo in Manila for us, our China correspondent there. We have lots more ahead here on the program. This is The China Show. Welcome back. Just a brief look at markets and some of the key themes we've been tracking. So we'll take a step back from the tech coverage. Just having a look at eco, of course, and in Australia, of course, that's in the form of some of the employment numbers that have come through so far, up, as you can see, fairly substantially against estimates there. So we're looking at that, 0.6% to the upside, some strength, which I would imagine is seeing some alpha right now relative to others as far as the Aussie dollar is concerned. Right, sports-related names in China are up, and I think up across the board, as you can see on your screens after, again, some policy pronouncements in support to enlarge the industry and further development there by 2030. And as you can see, of course, it's it's playing up quite nicely across some of the athletics-related names there. AI and hardware on your screens too. Okay, it's on the back of this capex plan. This is the way it's expressing itself within the Chinese markets, in as far as the Alphabet capex plans are concerned. And by the way, it's not just in China today. We're also seeing that across other markets in the region. A glance at benchmarks about 20 or so minutes into the cash market session. And coming up here in shows is we'll have a look at Indonesia. That market opens up and that surprise hold coming through out of the central bank. Will that further a rally in that market? Lots more ahead. This is Bloomberg.
Good morning and welcome back to the China Show. Here's a look at the CSI 300 about half an hour into the cash session there. We are, well, really just up just a touch, if we can barely say that, 0.2% there so far, but stabilized, of course, and we are back at levels that we were last week, Dave.
Yeah, trading sideways, I guess, is another way of putting that. I think if you squint, the gains look bigger than they actually are. Okay, which is, I guess, one way to do it. When at least the weather's cooperating, though, right? I think we're going into a weekend, I think, for the very first time in a long time, where it's almost dry weather this part of the world, right? So at least we can see some dry land here in Hong Kong. I mean, this is how Noah felt, really, when he finally chanced upon, of course, a non-ocean body of elements there. Okay, let's have a look at how we're doing. Asia Pacific, we're doing okay. It's not as big as moves as recent days, of course, but we are looking at some gains here. So it's still the chip makers, industrials, to some extent, some of the cyclical plays are really pushing this higher. Kospi's up 2.6. The strong dollar story has played out. The reason I say I phrase it that way is we did get some intervention midweek from the Philippines, for example, as that specific currency, which we'll talk about a bit later on, of course, did hit those record lows there. Dollar China sets on the stronger side of the exchange rate. And, of course, we've been talking about the yen. We'll talk more about the Japanese currency in a moment here. Indonesia's opening up. A couple of minutes into the session there, surprise hold. We are close to a technical bull market on the index itself, although, yes, I can hear you again. What do you mean bull market? We're still down 30% from the peak. So I hear you, and I'll acknowledge that. But it is about 18.5%, if not 19%, from the recent low. And a glance at the rest of Southeast Asia. And we will further a Southeast Asian eco conversation later on in the show. JP Morgan, just to note that, has upgraded Thailand, and downgraded Philippines. Well, that's just another way of saying it. Stocks and equities. Same word, but yes, Manila is up 0.4%. All right, a glance underneath the hood at some big names moving at this point. Anthony Stephens is with us to tell us what is catching his eye at this point in the trading session. Anthony.
Yeah, we got some flat regional benchmarks, but a lot of excitement under the hood on the AI trade. So let's go to it in detail. So you have Lenovo up very strongly on this capex kind of trade from Alphabet. You know, a lot of servers being bought across the world, and Lenovo is back on the radar as the top performing name in HS Tech. There's also some granularity in the Chinese AI play. So of course you have this geopolitical noise around restricting Chinese LLMs, most notably Moonshot. So that's kind of benefiting some of the less geopolitically sensitive plays like Minimax that makes a consumer LLM. Lastly, we have this interesting move away from foundries. So you have that struggle in TSMC that's keeping that market flat, but you're also seeing some foundry weakness in China. You're seeing Huaheng down 5.7%. And that can be kind of attributed to some of the reporting that Chinese LLMs are looking still for NVIDIA hardware in other countries. Now flip the board to China, the kind of picture is a lot more simple. People are playing just basic capex trades. You know, no complexity around it. You see some big moves in the kind of Shengyi and Foxconn and in the storage space as well. Montage is having a huge day of volatility again, and as we speak, the region is fading somewhat. So we continue to see this high level of intraday volatility in the tech trade as it looks to push past these consistently high oil prices. So this macro pressure versus this micro story is the big narrative in equity markets today.
Anthony, thank you so much. With a look at equity markets there, we're pivoting to FX markets. And Rebecca, of course, it's the Japanese currency, Rebecca.
Yes, the yen back below that 163 per dollar level after a brief gain following a Bloomberg report that the Bank of Japan was open to raising rates faster than economists expect. For more, let's bring in Bloomberg FX and rate strategy, David Finity. I mean, David, it's been very choppy times in the yen. just talk us through what we saw, and I guess the big question, does it really matter?
Well, I think it's interesting, good question. I mean, the yen did initially rise a bit on rumours that the BOJ would hike a bit faster than expected. At the moment, the market's been looking for once every 6 months. The market's moved that pricing a bit forward to maybe they'll hike in October rather than December. But at the end of the day, I think we said you're looking at a difference of 2 months. I think the key thing is not just the pace of the hikes, but the amount of the total hikes. And at the end of the day, the market's going, look, okay, you'll bring it forward slightly, but we're still not expecting a real surge in hiking, shall we say. So therefore, dollar yen's not really done that much. Again, it's really back to the dollar's side of the equation becomes very key. And what does the Federal Reserve say next week? How hawkish is it? Well, oil prices obviously getting elevated as well, not yen positive, given that it's an oil importing country. So overall, when you weigh up everything, at the moment it's like, yeah, positive, but that faded very quickly.
You mentioned the Fed there, and just to broaden out the conversation, I mean, first of all, any sort of surprises that we might be expecting, but then also just talk us through Aussie dollar, what we've sort of started to see there.
So with the Federal Reserve, obviously, we have Governor Walsh's new, basically, no comment is sort of good. The less information we give is the better. So the market would sort of, but therefore the market takes any information it can get. So the moment market will go, let's see what you do say. We're pricing half hikes this year. Does that balance whatever he does say? And that will be interesting. Obviously, they'll go off data soon after that. Obviously, we have US payroll data the following week, which will be very key catalyst. With the Aussie dollar, data came in strong again, higher than expected, which often does with Aussie payroll data. Unemployment rate was 4.4, constant. So again, positive for the Aussie dollar, RBA tightening, yes, we think so. But again, RBA is in that wait and see mode at the moment. So the market's going, the data's positive, but again, are you going to hike again? Debate for the moment. So again, it really goes back to the dollar side of the equation in terms of where all these currencies go.
You just hinted it there, the sort of new regime that we're seeing under Walsh. Obviously, in the absence of those press conferences, statements, public comments, all that kind of stuff that we're expecting to see, nonetheless, markets are still reaching for other sources. So are you starting to see the kind of new model? Like, what is it that traders are reaching for in the absence of the sort of old regime of perhaps more communication?
Be honest, it all boils down to data again. It's a good question, but it really boils down to data again. So the markets go, okay, you're not going to give us anything. We'll go off what we do know, which is economic data. And I said the following week is the payroll data, which has always been, shall we say, the granddaddy of all the data, that along with the CPI data. So the markets will very quickly go, okay, well, let's see what the payroll data does. Is it strengthening or weakening? At the moment, it's been relatively good, shall we say. So that trend continues. The markets go tightening labour, solid labour market, high inflation. Fed's going to hike.
Dave, I could talk with you all day about all of this nuts and bolts. The new world that's emerging out of the Fed. That's Bloomberg FX and rate strategist David Finity there for us. Dave, back to you.
Yeah, well, don't you guys have a radio podcast booth right beside a TV studio? I could listen to a 3-hour podcast on the ins and outs of cable, just on that, between the two. Speaking of currencies, before we pivot to the commodity markets, of course, and perhaps with these extensions in oil prices, just to note, right, so a lot of the weakness we've seen in many parts of Asian FX, whether that's the yen, the Philippine peso, we've talked at length as well about the Indian rupee, and the stability we're seeing across the Chinese currency means that the latter, against the basket of which some of the former is part of, we're nearing 4-year highs, if not there, effectively on the basket. Just to note, of course, that when you talk about yuan weakness on the exchange rate, that doesn't necessarily mean we're getting it weakness across the board. In fact, it might be the opposite as far as this is concerned. And despite this, exports have held up fantastically well. Just to also get it out there. Okay, part of the trade account is, of course, energy imports. That takes us into the oil story, extending gains right now, 96 on Brent. After, of course, you had these 2 attacks we woke up to this morning in the Asia Pacific of 2 Saudi Arabian tankers that took place in the Red Sea. Wang Yi is with us, our oil trading reporter, to get us up to speed and how this is changing the way traders are thinking about where the oil price needs to be. I mean, slowly but surely, we are a bad day away from $100 here.
Right, so today's oil price movements, or rather I should say oil price movements in the past couple of days, is testament to what the market what their read is on the situation in the Red Sea, as well as the wider conflict in the Middle East. Of course, the importance of the Red Sea is that it's one of the only channels where major exporters like Saudi Arabia have been heavily relying on during this Iran war to kind of safely bring out their Middle Eastern barrels to major buyers, such as those here in Asia. And with the latest attacks, physical attacks on 2 tankers, of course, that has raised some alarm bells. And as early as 1 or 2 days ago, in fact, when the Houthis first came out to say that they plan to sort of implement this kind of like a blockade, or to take I would say, firm action against Saudi-linked ships. Back then, for traders, it wasn't much. There wasn't much certainty on how these would be carried out. And just in a couple of hours following the announcement, what we have heard from traders based in Asia as well as in Singapore here is that many of these companies will still continuously send tankers to the region to pick up oil. But now with the latest attacks, it would seem that the market would have to take a pause and to figure out the wider implications of these disruptions and what could be the next steps for them to ensure that they could continue taking out barrels, whether it's getting ships to go through alternative, longer routes, or perhaps they could come up with some sort of arrangement with sellers like Saudi Arabia.
I want to pick up on that nice scoop that you just mentioned, that prior to this we were still seeing Asian buyers heading into the Red Sea, and in some ways that reflects the pain that is very, very acutely felt in this part of the world and in this region. What comes next? I mean, what are the options here, particularly for Asian nations?
So, Rebecca, as you rightfully pointed out, it's really a huge pain point for Asian importers. That's because, like nations such as Saudi Arabia, they're such important sources of oil. Of course, naturally, people will think about alternatives. Where are we at in terms of getting alternate supplies from the US and from the other parts of the world, such as the Americas? West Africa is also a popular destination. However, it seems to be some sort of like a double whammy, I would say, because let's take US for instance. They've also recently been caught up with a Storm Bertha, and that has also added more uncertainty to crude loadings. So for Asian refiners that I've spoken to, all these came at a really bad timing, because while on one end their supply from the Red Sea could be jeopardized, and their search for alternatives from places like the US Gulf have also ran into issues because of the weather. And right now, in another story that we just pushed out yesterday, there have also been cases of some Chinese refiners. These refiners may not be hard up on crude coming out from the Middle East, specifically from the UAE, and they've started to resell these cargoes to other buyers that may be in more dire need of such oil. These includes territories and places such as Taiwan, such as South Korea, and the Chinese sellers have been putting a price premium on them. So essentially, they kind of made a small tidy profit of this because for countries, for refiners like China, they're still not in desperate need of oil. That's because China still sits on a very huge oil reserves, and a lot of their refineries are still running at very low levels. So they're not really in urgent need to bring in all of these crude barrels compared to neighboring countries.
Okay, we'll keep an eye on this, and we have almost on a daily basis our Asia oil trading reporter there, of course, Rong Ming Neo, in Singapore for us. Well, let's stay in Southeast Asia. We'll take it straight now back to Manila, where, of course, Min Min Lo is our China correspondent here. It's the opening statement underway right now. Tess Lazaro, of course, the Foreign Affairs Secretary of the Philippines and the host. Underway, the ASEAN Regional Forum is just starting there. So, yep, we will take you back there once we get more news lines coming through. We'll leave you with live pictures and just take a very short break, and we will see. Oh, we will listen into that, I believe. Okay, let's listen in.
Ensuring that our shared maritime domain remains peaceful, connected, and sustainable for the generations to come. At the same time, emerging threats and transnational crime continue to evolve at an unprecedented pace. Among others, cybersecurity challenges brought about by emerging technologies, online scams, and other evolving security concerns require innovative and collaborative responses. By working together, we can strengthen our collective resilience while preserving the stability of our region. Our meeting today also marks an important milestone as we prepare to adopt.
Good morning, welcome back. Here are some of the major stories that we are following around the world today. Amazon is facing a US Senate investigation over allegations that China may have influenced its online marketplace. According to documents reviewed by Bloomberg, committee staff say they have evidence of what they describe as Amazon's negligence in addressing Chinese influence. Amazon declined to comment. China says it's ready to work with the US to implement the consensus reached by President Xi and Trump at their May summit in Beijing. The Foreign Ministry was responding to a Bloomberg request for comment on reported plans for AI talks in September ahead of Xi's planned visit to the US. Establishing a dialogue on AI was one of the outcomes of Trump's trip to China. The US Senate Commerce Committee has advanced bipartisan legislation that would effectively block Chinese vehicles from the American market. The bill would ban vehicles designed for wireless connections beginning in January. Movement on the proposal, which also covers cars tied to Russia, Iran, and North Korea, comes as US automakers face growing internal competition. A White House official has accused China's Moonshot of improperly using US AI models and NVIDIA chips to create its Kimi K3 system. Science and Tech Policy Director for the White House says the company probably acquired NVIDIA's GB300 servers, which are being banned from being sold to Chinese companies. The information is reporting that a U.S. Commerce Department agency is now formally investigating whether Chinese firms like Moonshot are accessing some of these advanced U.S. AI chips.
Well, yeah, I mean, speaking of that, let me just use that as a jumping off point, Rebecca, here. So I think when you look at the dynamics within the Chinese market and some of the rotation that's taking place amidst this downdraft or lack of momentum at best on the benchmark level. So you do have tech continuing to outperform. It's not the tech you're used to, though, from several years ago. You have several high-profile funds now pivoting to AI stocks and taking some money and that allocation away and funding that via taking away some exposure from consumer names. Lianting Tu, our managing editor for Asia Equities, is here to tell us more about what we're seeing here. And really, Lianting, what does it tell us about how investors are feeling about Chinese markets and the opportunities there right now?
Yeah, it does highlight just how dominant the AI narrative has become in China. For years, consumer stocks such as Maotai were viewed as a very core long-term holdings for many funds. But now, with the sluggish consumption and weak earnings momentum, and that has made it very difficult for fund managers to generate returns there. At the same time, if you look at performance of AI stocks such as SMIC or Zhongji Innerlight, they have delivered gains of 70% to 120% in just a single quarter. So, it's very tempting for some of the investors to really chase after the very hot names right now. But to be sure, many of these funds still believe that Chinese consumer names are still very undervalued given China's economic growth. So they're not really cutting it all out at the same time.
Lianting, I wonder if there's a concern that this is a bit sort of like, trying to close the stable door after the horse has bolted. I mean, is there a worry that these funds are chasing performance after AI stocks have already rallied?
Yeah, that's exactly the risk, Rebecca. Some of these AI names have already posted triple-digit gains. So these funds may be buying after much of the easy money has already been made. What is notable is that some of the consumer stocks that they sold, including Maotai and the Luzhou Laojiao, they have actually started outperforming several chip stocks this month. So that raises the possibility that the funds are rotating out of a sector near its lows and into a sector near its highs. So if AI momentum continues, the move could help performance, of course, but if the sector experiences another bout of volatility, and these funds could face criticism from their end investors for drifting away from their traditional mandate and investment style and buying into something that's quite late.
That's Bloomberg's managing editor for Asia Equities, Lianting Tu there. And a quick look at how Asian markets are doing as we go to the break. To Lianting's point, really AI very much in focus. And of course, that reaction to US earnings and reports overnight. You're watching The China Show. Stay with us. This is Bloomberg.
Welcome back. Here are some of the big corporate stories we're following at this point in the trading session here. Paramount shares, as you can see on your screens, up 3%. In the U.S., that's as of the close here. That's after its $110 billion takeover of Warner Brothers won conditional approval from the European Union. Now, the green light comes after both companies agreed to address competition concerns. But the merger still faces a U.S. lawsuit that threatens its progress over concerns that a deal could harm competition in and cable TV distribution. Now, Texas Instruments fell in extended trade. That's after the chipmaker reporting second quarter results that beat street estimates but failed to impress investors. Now, the company says revenue for the next quarter will come in around $5.6 to $6.1 billion. Now, it's confronting, of course, outsized expectations after a 70% stock gain this year. Now, Brookfield Asset Management is buying battery storage developer APA Power from Blackstone in a $7 billion deal. Now, the transaction includes a project pipeline, development platform, and a 200-person team. The company has benefited from rising North American demand for power infrastructure tied to the growth of AI data centers. Now, let's have a look at Asia. Samsung is revamping its foldable phone lineup just weeks before Apple is expected to make its first entry into the specific corner of that market. The Korean company is now offering 3 models with the mid-tier Fold 8 featuring a shorter and wider design that's actually better for things like watching videos, Rebecca, and also playing games.
That's right. And a quick look at some of the names that are moving during the last sort of hour or so. Firstly, taking a peek at Japan video game stocks. That's a fall there off the back of data that shows this slowdown in the US. So Nintendo, Capcom, the likes of Konami, all down there. Nintendo leading that drop along with Square Enix. And also, I mean, again, with a move, a lift by Goldman, helping boost a couple of other names, Lasertec, Ibarra, both higher there. And then finally shifting to AI. I mean, that's really where we are seeing a lot of the concentrated gains, despite some of the broader indexes perhaps being a little bit more stable or trading sideways. So Chinese PCB stocks jumping. That's after this report from the CCTV on robust demand. Elsewhere, also these Chinese indium-related stocks. That's again about surging demand linked to the booming AI infrastructure spend, of course, that we had confirmation of last night with some of those US earnings. Dave, back to you.
I'm actually looking at. I'm going to give you a number, Rebecca. Atomic number 49. You know what that is? I'm having to look up what indium actually is. And it's telling me that it's a rare, soft, silvery white metallic element. Atomic number 49, if either sound familiar. Certainly not to me. We'll have lots more ahead here on the program, including, of course, where we are in the Japanese markets as we go into the lunch break there. Lots more ahead. This is Bloomberg.
Good morning. It's 11:29 a.m. in Tokyo. Japanese markets going on a break very, very shortly. And just a quick look. Does look like we're coming down from some of those gains that we saw a little bit earlier in the day. Largely, say, trading sideways, about 0.5% or so up. Dave.
Yeah, and I think it's interesting in a sense that equity markets seem to be a lot more quiet today than they have been in recent days. And I think the attention has now shifted, I guess, to some extent to currency markets. Number one is because we have heard about intervention, of course, in Southeast Asia. We talked about the Philippines this time yesterday and, hovering still at around all-time lows. We know, of course, some of the measures in recent weeks and months as far as the Indian currency is concerned. Obviously, intervention's always been a feature of the conversations around the Japanese currency. And then you have all these eco numbers that have come out so far. So we talked about Australia and the punchy gains we're seeing in the Aussie dollar, this rate decision in Indonesia, which was close. It was slightly in favor of a rate hike, which we did not get coming through out of Indonesia. And it now begs the question of, are they simply buying time before they eventually have to move interest rates? Or is this something that they're betting on they'll be able to hold settings for a prolonged period of time? Bloomberg Asia Dollar Index, bottom of your screens. Let's get more on that, in fact. On Indonesia and Southeast Asia, the central bank, as we were just pointing out, they're surprised most in the market by leaving interest rates unchanged after shifting, of course, to this aggressive campaign to really bolster their support of the currency's value. Joining us now is the senior ASEAN economist at OCBC, Lavanya, Venkateswaran. Why don't we start with Indonesia? Were you surprised by the call? And I mean, if you were or if you weren't, do you think it's still a hike is still on the table for the future?
Yeah, hi, good morning. Thank you for having me. Yes, we were a bit surprised by BI's decision yesterday not to hike. We did, however, get a whole host of non-rate measures, including incentives on swaps and DNDFs, which were almost akin to a 25 basis point rate hike. So it does suggest to us that BI is starting to look at these non-rate tools, really, to try and bolster the currency at the moment. But we haven't taken rate hikes off the table just yet. We do think that BI still has room to hike the policy rate, but I think the pace of rate hikes going forward will now be a little bit more, or will be a little bit slower than what we saw previously, and will be a little bit more spaced out.
Okay, and specifically and it's interesting that they chose that route, because it does point to the fact that it's more a currency conversation than it is maybe inflation, but obviously it's a confluence between the two. Do you think the measures that were announced yesterday will work to put a floor underneath the currency, Lavanya?
At the moment, they have actually, to be fair to BI. We haven't seen the currency reacting very sharply yesterday. So we are still seeing it below the 18K level in recent days, which does suggest that there is some stability that the dollar IDR level has found in the last few trading sessions. But the real question here is whether this will continue, whether we will get durable inflows because of what BI has done. And considering the external backdrop still remains quite volatile and the uncertainties are still very high in terms of the overall global macroeconomic picture, it's still very hard to say convincingly at this point that there will be a durable stability that can follow dollar IDR.
Lavanya, I want to pick up on the point that you made earlier about this reliance on, sort of alternative non-rate tools here. Do you see BI and policymakers writ large actually rewriting the playbook here? Are we going to see a continued emphasis on perhaps liquidity measures, FX measures to try and manage this? Or was this sort of a temporary one-off moment?
It did sound from what the BI governor said that this is going to be a part of a longer playbook. It's not just the policy rate anymore. So BI is digging deep into its toolkit to try and address very specific concerns that they have. So the concerns right now are very much related to external stability, dollar IDR stability. And these measures announced yesterday are targeted towards those. However, going forward, we still think that there's a few other pressures coming in from the macroeconomic side, including inflation as well as external pressures. So it's not like the policy rate is completely off the table, because some of these more specific measures can't really address broader macroeconomic stability perceived risks. But I would say that in the near term, BI is probably looking at non-rate measures a little bit more than rate measures, because they have highlighted that they don't want to see the lending and deposit rates rise in the domestic banking market.
Yeah, picking up on that, domestic banking market has been a really critical issue for officials, and they have hinted about the difficulty they have in balancing both the currency against the pressures and wanting to avoid increasing domestic borrowing in particular. Do you think that we are starting to see sort of cracks appear in terms of managing that balance? And what tools does perhaps BI actually have to try and rebalance?
So it's interesting because the lending growth numbers that we got for June yesterday were actually above 12%, which is actually above the upper band of BI's 8 to 12% target range for this year in terms of credit growth. So credit growth is still doing quite well. They do have a lot of macro-prudential measures in place to try and bolster growth specifically for priority sectors. But there is a sense that overall demand for credit is not as strong as BI would like it to be. BI is, like you say, walking a fine line between balancing this intention to boost credit growth, but at the same time, hold back a little bit on passing through of policy rate hikes in terms of trying to basically manage this delicate tightrope that it's walking at the moment. So in this case, there's no real easy solution, but I think BI is using a whole host of other measures, including these macro-prudential tools to try and tweak at the back end credit growth for very specific and targeted sectors.
Lavanya, so we've talked about Indonesia. Of the other economies that you cover and you watch, do any one in particular stand out in as far as them not being done with the hiking cycle? Are we close to the hiking cycle ending across ASEAN, or is that too early a premature conversation to have at this point?
It's actually quite interesting because the monetary policy cycle across the region has become quite differentiated. I think the one thing that we probably highlight right now is actually India, because the RBI has, similar to Indonesia, used a lot of these non-rate measures to try and attract portfolio inflows. So we have seen the FCNRB deposits increasing to about $17 billion that the RBI announced yesterday. So the question, similar for RBI as BI, is whether policy policy rate hikes are still on the table. So we do think so. We actually think that most central banks in this region are looking towards at least a slightly tighter monetary policy regime going forward. So we do have rate hikes penciled in for RBI, for BSP, BOT, as well as BNM, and which suggests that, it's really now about timing. So we're not expecting any of these hikes to come in a hurry. We do think that they will be paced out over the course of the next 6 to even 12 months. So it's a very differentiated and a very slow and composed sort of hiking cycle.
I want to ask you about the oil element here. I mean, we're barely, 3-4 months from the start of the war. And I remember some of the conversations we had on shows, when the war started in Iran, and just the doom and gloom and the crisis overlay we've heard from analysts, economists, policymakers. I mean, we're barely into August. We're not even into August, is my point. And yet oil prices are back to 95. Why haven't these worst-case scenarios played out, is I guess, my question here. How have these economies actually been able to endure higher oil prices?
It's been very interesting, and I think it's been a journey that we've also been looking into because, when oil prices did rise, there was a sense that inflation will rise very sharply and so on. But I think we've seen a very differentiated reaction and a very different reaction to past shocks. It's not been a one-time high increase in price. What we've seen this time around is that producer prices are increasing faster than consumer prices. So at some point, firms are bearing the cost. And at the same time, at a national level, governments have started looking to diversify the sources of petroleum. So we've gone back to Russia as a key market for petroleum exports. Countries are getting quite innovative. We've seen Thailand going to Kazakhstan, Azerbaijan. So we're discussing a whole host of different options here in terms of how to handle this crisis. We've even tapped into working from home and so on. So I think there's some adaptation of the COVID playbook. There's some adaptation of substitution from other markets. And also there is an adaptation of just firms not passing on the higher producer costs that we're seeing across the region.
Yeah, this supply chain resilience book keeps writing itself into new chapters. Fantastic. Thank you so much for the time, Lavanya Venkateswaran there, Executive Director and Senior ASEAN Economist at OCBC. Just a glance at markets. We're about an hour and 10 minutes almost to the second here cash market session. 1.1% on the Hang Seng Index there. Lots more ahead. We'll talk about South Korea coming up here because a lot of workers there are now saying, me too. That's after Samsung paid massive profit-sharing bonuses to some of its staff. So we look at perhaps the ones that may be feeling that they're left out. That's coming up next. This is Bloomberg.
Good morning, welcome back. Labour unions are rallying across South Korea after earlier protests forced Samsung to pay bonuses of more than $400,000 to some employees. Workers at other companies are now seeking similar profit-sharing deals. Bloomberg Seoul Bureau Chief Kat Barton joins us now. Kat, just explain a little bit to us how this actually played out, because this has been a really live debate in South Korea for quite some time now. And it does seem like this may have sparked a chain reaction in terms of the demands that we're seeing from workers at other firms.
Yeah, you're absolutely right. South Korea traditionally does have very strong labor unions, but the whole idea of profit sharing has been supercharged by the AI profits we've been seeing recently. SK and Samsung are set to pay enormous amounts of corporate tax this year, and the government has been actually leading that discussion, saying, what can we do with these excess profits, excess taxes, excess tax revenues? How can we make sure that this is going into all of society and that everyone is benefiting, not just the few? And we're certainly now seeing a spillover from that. We've had workers at Hyundai Motors on strike, partial strike this week. And last month, we had workers at the big tech company Kakao also on strike. So you're seeing more and more workers, including in sectors that aren't really directly linked to AI, saying, well, where's my share of the profits here?
Yeah, which brings up an interesting point, too, is not all these companies, Kat, or David here, by the way, are created equal, right? And I think, so my question is, it's certainly spreading to other big Korean names and maybe even others down, I guess, the market cap ladder. But is there actually a profit case to be made, and are there profits to be shared, I guess, as you broaden beyond simply the usual names here in Korea?
Certainly not on the same scale as Samsung and SK Hynix, which are on track to report absolute record profits this year because of their key role in global semiconductor supply chain. But these South Korean chaebol, including, for example, Hyundai Motors, they are doing very well. And workers are seeking not just profit sharing, but also they're worried about the impact of AI on their jobs. For example, these workers in motor factories, they're also seeking guarantees that Hyundai's Atlas, the humanoid robots, won't be deployed without consent from workers. They're worried, about what the impact will be on their future jobs. So they're also seeking guarantees of some kind of level of protection for human workers against future rollouts of AI. And that is true in industries, yes, which aren't directly involved in semiconductor supply chains and certainly aren't quite as profitable as Samsung and SK have been this year.
Kat, I want to pick up on the point you made earlier, these very strong workers' unions that you have in South Korea. There is also some amount of pressure, that has then trickled up towards policymakers and officials and how to deal with this. It's in some ways a sort of existential question about the so-called K economy. Are you seeing any kind of reaction? Is there debate among officials or among sort of elites about how we deal with the sort of more kind of fundamental, abstract question of profit sharing?
Absolutely. South Korea is really leading the global conversation on this. In particular, President Lee's policy chief, Kim Yong-bom, he posted a very explosive Facebook post recently where he called for said we should consider what he called an AI citizens dividend. So he's talking about how if South Korea is on track to receive more corporate tax revenues from Samsung and SK in particular than it has ever had before. And he's saying we need to start looking now at what we do with this money, calling it, it could be akin to a windfall, like a kind of Norwegian-style oil windfall, or something that's come from countries where they've had, traditionally mineral resources or oil wealth. And he's saying we need to not squander this. We need to have a conversation now about how we can be investing this in the youth, investing this in making sure that people aren't unemployed, that the whole of society can benefit from South Korea being in this absolutely unique position in terms of their dominance of the semiconductor industry. So certainly that is a huge debate at the policy level here, although we haven't seen any specific policy proposals at this stage, but the conversation is very much ongoing.
Yeah, in Parliament, and as you were just pointing out, in some parts of the streets, Kat Barton, thank you so much, are so Bureau Chief there with the latest there. And I think we'll get earnings coming through from both those big companies. There we go. Thank you so much to my producers for helping me out. July 30 and July 29 on Samsung Electronics and SK Hynix. So that's next week. So stay tuned, of course, for our coverage on those. Okay, I guarantee you will obsess over those things when those results come out. You can rewatch that on the Bloomberg Video Hub, that segment we just did, or others you might have missed here. So for our subscribers, you can explore live streaming, interviews, news, and all the TV shows, Bloomberg TV shows, documentaries, report analysis, and more here. Check it out, bloomberg.com/videos. Welcome back. You're watching the China Show. So let's zero in on geopolitics. You have U.S. Secretary of State Marco Rubio talking about how the U.S. and China are moving toward establishing these boards of investment and trade. That's ahead, of course, of this big visit on the part of Chinese President Xi Jinping planned for late September to Washington. Rubio spoke with his Chinese counterpart Wang Yi on the sidelines of the ASEAN foreign ministers meeting taking place currently in Manila. Min Lo, our China correspondent, has been on the ground for us. They're covering what's been going on there. Yeah, Min, what's the latest? What can you tell us about all the conversations? Anything stand out to you so far?
Yeah, so Rubio had about slightly more than an hour's time with Wang Yi yesterday evening, and it seems like they spent much of the time discussing or laying the groundwork for that potential Xi trip to Washington, with Rubio telling reporters that it is going to be a very positive trip for President Xi, and it seems like they talked about this Board of Trade that was first announced in May during the presidential summit. This is something that Scott Bessent has said could reduce tariffs on at least $30 billion worth of goods in non-sensitive sectors. China also said it was a practical and constructive talk that the two sides had, and it seems like they steered clear of thorny issues. Rubio didn't mention anything about election interference, and according to the Chinese readout, there was no mention of tech issues as well, despite the latest accusations from the US when it comes to IP theft being committed by companies like Moonshot AI.
Okay, now you spoke with a Canadian foreign minister against the backdrop of all these very complex and complicated issues. What were the takeaways for you from that conversation?
Yeah, so the Canadian foreign minister also got to meet with Wang Yi yesterday. I asked her what her key message was with Foreign Minister Wang, especially when we did see how Canada-Chinese ties have been warming up a little bit, right? Canada recently lifted those 100% tariffs on Chinese EVs. Have a listen to what she said about how she will manage the relations with China.
We have resolved certain trade tensions with China, and we did that earlier this year when Prime Minister Carney met President Xi in Beijing. What that allowed was more canola leaving Canada for China and more beef and seafood products from Canada being imported into China. The work that we're doing on other sectors, including auto, is very constrained in the sense that we put a specific ceiling on the number of EVs that would be coming from China to Canada at about 49,000. So that is a very tightly structured agreement between Canada and China to resolve trade tensions. Our relationship with China, though, is broader than that set of issues that I just described. We are certainly elevating our relationship to a strategic partnership. We are cooperating in certain areas, for example, in the area of energy cooperation, in the area of people-to-people ties, and ensuring that the populations of our countries can develop and travel and see each other more frequently. Those are the types of other topics that are also on the agenda.
So would you welcome more Chinese investments, or is national security going to take precedence?
Well, we will always take the steps necessary to protect and defend Canada's national security. We are very clear about that. And so our relationship with China, like with other countries, is nuanced. We are going to always stand up for Canadian interests in the area of security, in the area of domestic protection of our populations and our democracy, standing against transnational crime, as well as making sure that our economy grows and we double non-U.S. trade over the next 10 years. So again, it's a nuanced relationship, and we must appreciate the complexities involved.
Okay, yeah, that was just the latest from our ASEAN coverage. Min Lo, thank you so much in Manila there for us. Speaking in ASEAN, just very quickly, just to note here, the Indonesian markets have crossed that threshold. We are set to enter a technical bull market, 20% higher from the recent low. So stay tuned for that and whether or not we close above that level, of course. Before we go, just a look at some sector movers, sports, and solar, wind, renewables on the back of policy pronouncement to support both through 2030. As you can see, markets are responding to that. And a look at Asian markets. Before we go, we will see you all tomorrow. Thank you for joining us today. This is The China Show.